Good morning, everyone. I'm Vince Lancy. It's 8:13 today in the AM on Wednesday, waiting for Fed decision day. A little bit of an ambitious program today. Let's see if I can pull it off. We're going to discuss two topics. Hong Kong moves to eliminate dollar use in the public square with a throwback for price action to October of 2024. Stay tuned for that. It's kind of funny. And we're going to try and do a little bit of a Fed Day preview for the chat on the three R's. Okay, let's get going. What you see on your screen there is an overlay of the Gold Fix Morning Rundown from October 2024. And I'm playing the clip to give you some context for what's going on in Hong Kong because we covered it back then. However, you'll find amazing, humorous, the price action on the right-hand side. Gold's at 26.85. So I'm going to play this clip to give you context on the news that came out yesterday and the post that we put out yesterday on Hong Kong. This is when we first noticed the situation changing in Hong Kong and how they were moving towards what just was announced. So let's play that. Next story. The Hong Kong connection grows. All right. I don't think anyone's talking about this yet, but they should. Hong Kong aims, they should. Hong Kong aims to leverage its position as one of the largest global markets for gold imports and exports to become an international trading hub. Now, it's already an international marketplace, but they want to be an international gold trading hub, and that's according to John Lee, the chief executive of the Hong Kong Special Admin Region. This initiative is one of several key measures aimed at reinforcing Hong Kong's role as a global financial center. Lee also announced plans to deepen mutual market access and expand Hong Kong's offshore renminbi. Now, this is pretty significant, but it's really not unexpected because with Dubai, with Shanghai, and with Singapore all becoming, in their own way, gold hubs, Hong Kong's international status is in the process of being threatened. You know, China's coming out, and as China comes out, Hong Kong loses its franchise. So it needs to protect it. Anyway, we think it's very significant, and it's a sign of capitalism in the region. You can see the rest of that clip in the post provided. So let's go through what exactly happened yesterday. Now, nothing has literally happened, but the mayor of Hong Kong, president, whatever he is, Lee, right? Hong Kong is now eyeing tokenized gold trading to counter dollar dominance. Now, our title, our a little bit more sensational titles, Hong Kong moves to eliminate dollar use in public square. And that's our position. That's what's happening right now. Hong Kong is weighing a plan to create the world's first tokenized gold settlement hub, aiming to bypass dollar dominance and Western payment systems. Chief Executive John Lee will outline the initiative in his policy address, positioning gold as both a hedge against sanctions and a foundation for new liquidity in Asia. The effort reflects, now those are the facts. That's what he said. We believe the effort reflects the BRICS and China's long-running strategy, and that's a top-down meets bottom-up strategy. An adoption to replace the dollar with tokenized gold in full trade and transactions. So from the top down, they change the law and they say, we want you to own gold. They encourage you. They use capital constraints. They liberalize ownership. And then from the bottom, and then they take delivery. They have vaults. They institutionalize gold ownership. They make it a key pillar of the state. And then from the bottom up, which is not as easy to do, they have to change the culture. The culture is used to handing dollars or whatever it is they're handing, and they need to change the culture. And it's not easy to change the culture in China. Um, as recently, you saw they failed with their uh, just failed's not the right word, but they didn't do very well with their digital yuan. But now they're going to do a digital gold yuan type of thing, and this is a generational move. This is not like it's going to happen tomorrow, but it's going to happen now, and it's dangerous for the dollar because Hong Kong faces the world. Hong Kong is a insertion point for Western stuff coming to China, and it's also it's a two-way filter, is what it is, and I think this is important. That's all I'm going to say. They're moving. They've moved. How about this? They're halfway to replacing U.S. Treasuries as the store of value. And now they're seeking to replace the dollar as the currency of value, right? So store value versus transaction medium, if you want to look at it that way. Gold, great store value, very impractical currency. Well, tokenized gold. Who knows if it's a good store value? Tokens are probably lied to as well. But as a transactional value, that'll happen. Now, is that easy to do? No, it's not. But it's easier than you think because people are electronic now, right? They use the card. Maybe it's a gold card that uses tokenized gold. But that's what they're moving towards. Make sure everyone has gold, seed the ground, right? And then change the top down and meet in the middle, and it's a monetary revolution. The caveat is the U.S. dollar is the most important franchise in the world. We're not going to let it go easily into the night. Number one. Number two, um, you know, the dollar persists in being the most important currency on earth, despite the idiocy that manages its that's the custodian of it. So uh, this could be, not a flashpoint, but this could be the nexus of the next big problem, which won't happen tomorrow, but now you know it ahead of time. So uh, next, these are the stories from yesterday. And in case you missed it, there's more on Hong Kong. There's the LBMA silver and Hong Kong gold story from October. And then August 18th, we said gold trading comes to Hong Kong. So now, those of you who look at China and say, oh, it's just politicians with rhetoric, I agree with you. It is. But what has China said? Everything China has said in the last 5 years, they've done. So they're acting like good politicians. They say it when they're ready to do it. They don't say it to get people hyped and then change the subject later on. So they have a plan. There's going to be some big pushback. And if let's, you can't replace the dollar. I mean, you can't replace the dollar that easily. And uh, doing a wholesale conversion of a population culturally is dangerous. There could be pushback, as Mao learned during his rule. Okay, there's a chat. A lot of good questions in there, so I'm going to address a little bit of them today in the last part. Today's Fed Day, and let's just go right to that now. All right, Fed Day. So it means nothing in the long term. It means nothing to Hong Kong strategy. It means nothing to dollar debasement. It's just today. But sometimes it gives you a clue as to where the market could be headed for, say, the next week to 6 months. Now, the broader market, meaning I'm talking about stocks and bonds, are anticipating a 25 basis point rate cut. At least that's what the odds makers based on futures are telling you. Uh, and there's a small minority that thinks there's a 7.5% chance of a 50 basis point cut. And there's even a minority, 1%, that thinks that there could actually be a rate hike. Now, let's assume that is correct because that's what the market's doing right now. Um, if the Fed does cut 50 basis points, you may catch a lot of people flat-footed. So look at gold. I think gold got a little bit ahead of itself. Let's focus on gold here, right? Gold got a little bit ahead of itself. We're getting into the number or the data. They're nervous. Uh, I mean, it's like $200, over since our breakout. We're 3 weeks into it, and a retracement is good, healthy. With regards to today's data, to give you a tactical feel for it, anyone who gives you a price doesn't know what they're talking about. Okay, I mean, you may as well flip coins and call heads. Um, but what you can handicap is when data comes out. There's something I like to use called the three R's, and those three R's keep me centered as I'm watching the screen and obsessing about it. And the three R's go like this: when a known data point comes out, the market reacts. It's a knee-jerk reaction. The impulsive move is, where's the imbalance? So let's say we have a lot of people that have already bought, and the news is whatever the news is. Let's say it's what's expected. The reaction, if the market is too long, will be lower. It'll be a knee jerk. Selling will push the market lower, off balancing, less buying. Everyone's already invested. And then after the reaction, which could last anywhere from 10 seconds to an hour, you have the reassessment. And the reassessment is when all the panicked money is out, all the bridge and tunnel money is out, and the market reassesses. What do we really think? It's like reading the report again. And then the market reassesses. Sometimes it goes sideways, sometimes it goes higher in the reassessment, and sometimes it goes lower. But it does it with a lot less oomph. It just kind of peters out. And then reality sets in. That's the third one. Reality is the rest of the day. So the rest of the day is the market picks a direction, and either that direction is determined by the big picture, which is buy gold, or the shorter picture is we're too crowded. So if today is, I have an opinion, but I'm not married to it. And one of the founders, Digit, shares this opinion. He's a macro trader. If you look at gold versus stocks over the last, say, 2 weeks, gold's ahead of itself, right? Now, is that a sign that there's a lot more buying that has to come in? Yeah, it probably is, right? But, it's a little bit over its skis right now. And if the market is expecting a 25 basis point cut in stocks, it looks like it's hoping for more in gold. You follow? So if we get a 25 basis point cut, I would expect buy the rumor, sell the news is the axiom you want to work with. So reaction should be lower, reset should be sideways, and reality for the rest of the day should be lower. That's an opinion. It hopefully doesn't last more than a week. If there's a 50 basis point cut, which is 7.5% chance, expect the market to, uh, I don't know how to react. It could react up, it could react down, probably react up. I mean, it's going to be crazy, right? It's going to react up, and then it's going to pull back, and then it should rally for the rest of the day. But unfortunately, you have to handicap these things. But I want to bring it up, but I got to bring it up. It's sell season, and this applies more to miners than to gold itself. But you've had a tremendous run up, and uh, even though it's been tremendous for gold, it's been bigger for miners over the last 6 months. And as a result of that, you are still going to experience people that are long that are going to take profits going into the end of the year. And hopefully they'll be selling into hands that need to buy. That's fine. But sell season is around the corner. So I think you might start seeing some people going, well, the Fed cut 25 basis points. That sucks, and then say, well, I may as well take my profits now. It'll never go up again. That mindset that we all have. Anyway, so that's the three R's. What it means to be lower pre-info, it means that what I just said is that everyone's a little bit long, and some tourists are leaving the market a little bit early because they want to get home and avoid the traffic. Are they smart or are they stupid? We don't know, but that's what's happening right now. So, and as I mentioned, sell season. So that's it. Let's take a look at the chart for a second here. Yeah. So when you're looking at short-term stuff, for me, it's always good to look at the hourly and the Bollinger Bands. Right. That's a nice bounce off the lows there. So you should be long. See how it acts at 42.09. See how it acts at 42.54. Well, for crying out loud, don't be long below here. Maybe you want to buy it below there, but don't be long as we go through there. It'll make you have a heart attack. Uh I think that's it. That's enough for today. Oh, the buying right now. The market is off its lows, not well off its lows, but off its lows. That's the US gearing up for that American buying. So there will be American buying today. That's what that's telling you. There will be American buying because we've bounced off the lows. You know, the selling at 8 a.m. in London, the gold fix, where they fix the price lower. Well, the gold fix is now becoming the American gold fix because people are now buying it in anticipation of the US buying, which is kind of overwhelming the selling out of London lately. So, is it going to take us back up? You don't know. Nobody knows, but there's buying now. So, will that buying be enough to get us up on the day? Maybe, probably not. But the rate decision will be the arbiter of that today. Long story short, today doesn't matter, but enjoy the fireworks. Now you know how to look at the fireworks a little bit better, hopefully. I'm Vince. Have a